All right, how's everybody doing today? Super excited for you to be with me on this very important live cast. Today we're talking about investing for cash flow versus flipping for profit. And it's really interesting because just a few days ago I was talking to my wife and also another buddy of mine that had been investing for a while, and we were talking about the dilemma that we had. When 2008 happened, we kind of kicked ourselves a little bit because we had decided to rent out and keep properties. We felt like that was the responsible thing to do, was rather than sell and make a paycheck or a payday, a big payday, maybe $30,000, $50,000, sometimes more. We said, well, we'll just take a couple $100s a month in rent and not take that big payday. And when 2008 hit, which was a real estate financial crisis, we said, oh no, I wish I would have sold it and taken the cash. Well, now you look back in 2021, I'm so happy I kept those properties. And so there's these real estate cycles that it's important to be aware of. And so the answer really to this is, should I invest in cash flowing properties or should I invest in properties I flip and make a big paycheck? That's what we're going to be talking about, the pros and cons to both, what you should be doing, what you should be doing in today's market, and so much more. So let's get into this, guys. Investing for cash flow versus flipping properties. Who is excited to be with us today? Roche in Atlanta is with us. Thanks for being with us, Roche. Love having you here. Okay, let's jump into some things here. What you're going to learn today. Every single week we do a finding tip of the week, and today's finding tip we're going to be talking about is how to find properties using auction properties. We're going to be talking about active versus passive income, what the differences are. We're going to be talking about cash flowing assets. In addition to that, we're going to be talking about the benefits of holding real estate, especially holding long-term real estate. So our agenda, this is our welcome and our update. We're going to jump into real estate news and what's happening. We're going to jump into that finding tip of the week, something every single week we talk about a way you can find properties in today's market. Then we're going to talk about our topic of the week, which today is cash flow versus fix and flipping. We always have our t-shirt giveaway, which we'll be announcing last week's winner at the end of the live cast today. And then I like to give you a free tool, something you can use and implement in real estate investing right now, absolutely for free. I'll be giving you a link to that towards the end of the live cast as well. This show's for entertainment purposes only. Before you make any financial moves, consult with a real estate professional, attorney, CPA, or other professional in the subject matter. Everybody's situation is different. There's no one size fits all. DHM may receive payments for the show for sponsorships, guests, and forms of books, giveaways, items, discounts, and other remunerations. As with anything in life, results come from education, following a system, hard work, and determination to follow through until the end. Welcome. We've got a few more welcomes. I get a shout out there. Gaynell from Atlanta is with us. Mike from Los Angeles. Mike, thanks for being with us today. How is everybody? If you haven't already, please comment with your name and the city and state you're investing in. This really helps me because I put content together, which I should have done Atlanta, since we've got Roche here and Galen here from Gaynell, here from Atlanta. I'm going to start doing a little more Atlanta examples. I think today I'm doing Chicago, but maybe I'll switch it up and do Atlanta. If you guys want to see Atlanta rather than Chicago, put it in the chat and comments and let me know which you would rather see. If you're watching this as a recording, you can join us live every single Tuesday at 6 p.m. Eastern Time. We are here doing this live cast where we go through these important real estate updates, techniques, and strategies for real estate investing. So let's talk about what we're giving away today. We are giving away actually, I've got it in reverse order, so let me straighten this up here. We are giving away one of our killer I Flippin' Did It DHM shirts. This is what we're giving away to whoever wins our t-shirt of the week, along with one of our DHM masks. And this week's winner, the one that we'll be announcing at the end today, is going to be getting our I made it through rehab shirt along with one of our masks as well. So that's what we're giving away. So we'll be announcing last week's winner at the end of today. And this, from what you're doing today, will get you enrolled to be a winner for next week. So what you have to do to become a winner is ask great questions. If you want to be that t-shirt winner, ask great questions. Leave positive comments, engage with other people on the chat and also on the recorded video. We're looking for high interaction, people that really want to know stuff, that are wanting to learn, that are wanting to contribute. Those are the types of things I'm looking for. I'm also looking for people to leave comments on our recorded video. See, if you leave comments on the recorded video, it really helps us out, helps out YouTube, means a lot to me. So we're looking for those things as well. So if you do those things, that's how you could be chosen as the winner of the week. Because each week I choose one winner that's going to end up getting that t-shirt of the week, and we pay for the t-shirt, we pay for the mailing, we send it right out to you, and I'd love for you to be the winner of the week. Now, for those that have been winners before, take a picture of you wearing these amazing shirts and put it on social media, share it with us. We would really appreciate it. I'm gonna have Kate tell you what hashtags we should use and all that kind of fun stuff as well. So, man, we got a couple other people I need to shout out to. So, Michael is saying that the market's absolutely crazy in Los Angeles. 20K over asking is the norm. Multiple offers, renovating contingency, removing contingencies usually wins. Yeah, I think that's the case everywhere. I want to be on the selling side, and on the buying side, I want to be buying off-market properties. Gaynell says she'd love to see Atlanta. Well, we may just have to go Atlanta. Let's see here. Nixon 1. You've been here before. Hey, thanks for being here, Nick. Let's see here. All right. If you'd like to see these live casts continue, I really need your help. My goal is to get to 5,000 subscribers this month, which is awesome. That's a lot of subscribers. So happy and grateful for those of you that are subscribers. So I am shy 30 subscribers to hit my goal of the 5,000 subscriber mark. So if you're listening right now and you're currently not a subscriber, please head on over and click on YouTube, DoHardMoney, and hit that subscribe button. It means the world to me. And if you do, please type it in the comments that you are the newest DoHardMoney subscriber. Put that in the comments. Who knows? Maybe it'll help you win a free t-shirt for next week. I don't know. We'll see. Just saying. But for those of you that are subscribers, every single week, or every single day, I should say, I am putting together a video just like this. What are the best rehab projects? Contacting the property owners, those different types of things. They're little 5-minute give or take videos about something specific that you can watch and digest really easily that can help you in your real estate investing. And then, of course, every Tuesday, like we're doing right now, we've got our weekly live cast where we do a deep dive. So if you're my newest subscriber, type it in the comments. You're the newest subscriber, either in the chat or in the recorded video. I would appreciate it. Hit that thumbs up button, hit the subscribe button, the bell notification, leave a comment on that recorded video. And the most important thing that means the most to me is if you would tell someone else about this. It's interesting. My closest friends are ones that have done real estate, or we've done real estate investing together for years. So Andy, one of my buddies, we've been investing in real estate, not together. We've never bought a property together or anything else, but we were learning together. We were doing things. We were running things by each other. And it's really awesome to have financial friends that are on the same path that you are. And it definitely helps the journey be a little less lonely, because sometimes there's loneliness as you're trying to figure things out. And even once you've got them figured out, you could say the figuring it out never ends. Let me just tell you that. It's part of the journey, which is important. Now, I talked about it earlier. Every single week, I want to give you something of value, something of use, something you can go and use today to help you in your real estate investing. And today, what I'm going to be giving away is a postcard template. And at the end of this, I'll be giving you a link where you can download a copy of this postcard. This is kind of the fake looking handwritten, I shouldn't say fake. This is looks like real handwriting, but it's computer generated. It's a great little postcard that you can send out to people. That is fantastic. You'll get an editable version so you can put your own phone number and that type of stuff in. So hang on, and we will give you that at the end of today. Make sure you stay till the end and you'll get a link on that. Let's see here. Nixon One's telling us strong, very beautiful, right? Supply and demand is both great and evenly. Oh, that's interesting. I got to move this. Got so many screens. Is both great and evenly. Okay, interesting right now. That's good to hear. Thanks for the update on that, Nick. Okay, this is our next section where we're going to jump into our real estate market update. What's happening in the real estate market that you need to be aware of. But before we do, I need to get some water. All right, guys. Real estate market update. What is happening in the market? We've been hearing from Nick on what's happening in Philly, maybe a little more of an equilibrium there. We've been hearing from who's in Los Angeles. What did we say here? Michael in Los Angeles, where $20,000 over asking is the norm, removing contingency. Gaynell in Atlanta hasn't told us yet, but I'd love to know what you guys are seeing in Atlanta. I know that Roche's been having some struggle finding some properties, and so that's because of that getting outbid and some of those things, but we're focusing on going after off-market properties, which is one of the things I'm going to be covering today in our finding tip of the week, so you're going to want to stay tuned on that. Okay, the daily digest for real estate investing. This is kind of the best of times and worst of times saga unfolding here. Supply continues to seriously lag demand. Flipping some of these metrics in the red while driving up price to record levels. It's a great time to sell. For buying, not so much. We're seeing that. Unless we're buying off-market properties, guys, that's kind of the whole thing. When you see the news, they don't think about what's called the wholesale market, which is properties that can't be bought or sold because the property's in need of work, and so they've got to be paid for with cash or hard money. That is not something that gets reported on. So 5 reasons why real estate closings may be delayed. Financial issues, appraisal roadblocks, which is really a problem now, especially with the rising values. Getting properties to appraise what people are willing to pay for them can be a problem. Title problems, right? So problems with the title, home inspection holds-ups, and the current market. Those are all things that can be delaying the closing. Let's see here. Gaynell is saying same thing here, being outbidded. So really, let's talk about this just for a minute. You're really getting outbidded in most cases when you're dealing with a property that's listed on the multiple listing. So my question to everybody out there, Nick, Gaynell, Roche, and Michael as well, I think you made a few comments on this. Are you going after off-market properties, or are you trying to find investments using listed properties on the MLS? That's really what I need to know here, because that, I think, is going to be the big shift in getting you to getting a property faster, or getting you a property in this market. How the Biden tax proposals could impact real estate investors. One thing business owners are able to take advantage of right now is called this 1031. Under the IRS code, you're able to defer tax exchange in the start of a small property and then exchange into a larger property. However, both properties must be what are called like kind, like for like. So it's really just investment for investment. How Biden's tax proposals could impact real estate investors? Well, what they're talking about doing is they're talking about targeting like kind exchanges. That's one of the things this administration talked about. That's very concerning as real estate investors, just for the fact that the strategy for these long-term holds is going to be quite a bit more difficult to get out and not pay some taxes, or what's called deferring those taxes. That's what we want to be concerned about there. So it's something to keep our eyes on. Another big item under consideration is the ability for non-residential real estate owners to depreciate improvements, which is basically, this is kind of like an accelerated depreciation. So what they're trying to do is eliminate the bonus appreciation for commercial properties. So it's something we need to keep our eyes on as well. Nick is saying, I have a realtor sending me properties listed on the MLS, but I'm also searching for off-market properties as well, and there are quite a few off-market. Yeah, I mean, I think it's a great strategy. What I find, I am not looking at properties that are listed at all, because what I'm finding is it takes me too much time. I'm doing the research, I'm doing everything and finding out, and then everybody's bidding it. So I'd rather spend all of my time going after off-market properties rather than spending any time going after listed properties, because it's just a distraction right now with how competitive things are. Michael saying, I bought my first property with a back unit. During my search, I had issues getting my offer accepted with other properties. I realize now off-market is the place to be for investing. Absolutely, Michael, 1,000%. What are you doing right now, Michael, for off-market property investing? Nick's saying, I've been hearing things about getting licensed to wholesale properties. I'm wondering if that's necessary or required. It really is going to depend the state that you're located in. Some of the states are cracking down on wholesaling, and a lot of states where they are, what they're doing is selling what's called a beneficial interest or selling what's called a membership interest. So some wholesalers in states where there's licensing issues are either A, getting licensed, or B, they're putting the property into a trust or into an LLC, and they are then selling the LLC or the trust. They're not selling the real estate, but the trust actually owns the real estate. And so you're going to have to check out with some of your local laws there. I'm not an attorney, but it's something to take into consideration. I hope that's helpful for you, Nick. And also some good ideas for some workarounds there. Gaynell, I'm actually using Investor's Edge. I had one property. I think the seller spoke to someone else and he wouldn't accept my offer because I saw a neighbor list their property 2 times more than I offered. I think the real important thing here is with that, and I appreciate the comments. The thing you've got to realize with this is what's the condition of that property. So if they list their property for double, let me back up on a few things, Gaynell. So the first thing is that's going to happen a lot. So you're going to have to be talking to lots of sellers and lots of appointments. I think you're probably going to have to go on like 10 appointments before you end up getting one deal. And so if you're not using the Next Deal Blueprint, you're going to want to use that. It kind of reverse engineers it all for you. So that's the one thing. So don't get discouraged because of that. The second thing is when you're going on those properties, you don't want to leave without a contract. So what you're doing is going in there and you want to be looking at the condition of the property and making sure he realizes what needs to happen to the property in order for it to be in the same condition as other things. So keep after it. I hope that helps. If not, put some more comments in here. Nick, I apologize. I know that's off subject. No, we're here to help each other. So no problem, Nick. We appreciate you being with us. Dom from South Carolina, challenging in off markets and on the MLS. Jonathan, what are you doing to find properties off market? What's your strategy? Be interested in hearing that. Type it in the comments. I'd like to know. Michael, mainly lists from realtors and wholesalers. Haven't done mailers yet. What type of lists are you getting from realtors, Michael? And wholesalers, wholesalers are marking up property so much right now. I don't really recommend looking at wholesaler deals right now as well. I'm talking direct to seller. We're going to show you a little bit of that, but I'd be interested in what you're doing. Hey, Don, let's see here. Awesome. South Carolina experiences similar issues. Let's connect. Awesome. Okay, there are more real estate agents than homes for sale in the United States right now. Isn't that absolutely insane? The lack of existing homes was the only part of the big problem, though builders have struggled to ramp up construction of no homes, and is specifically in single family that are pretty popular price ranges. Once the foreclosure memorandum ends, homeowners who haven't been able to financially rebound from the crisis may be forced to sell their home. This could also add to the supply of problems on the market. That will help alleviate scarcity concerns. So that's something we should be thinking about. Basically, the idea is if these foreclosures come on the market, they're going to get gobbled up really quickly, which will help with some of the price equilibrium. This is New York Times saying, where in the heck have all the houses gone? You can see just in 2019, we were right over 1 million. We pop up to almost be 1.2 million. And here we are in 2021 at 468,000. This is active homes on the market. So this is kind of what we average. You can see back past years, we typically average somewhere between 1 million and ranging up to 1.5 million. But you can see that steady decline and has just fallen off a cliff. And what happens when there's little supply and there's lots of demand? Prices go up, which is exactly what we have been experiencing and exactly what we have been seeing. Mike, we use Investor's Edge, checking pre-foreclosure notices, sent also checking with wholesalers. Yeah, Jonathan, have you done any driving for dollars? Be really interested in that. We've rolled out our new training last month, which is all about driving for dollars and calling those guys. I think that's probably the best way to be finding properties right now. I strongly recommend it. But if you have got more questions, put them in the chat. Love the comments today, guys. Love the questions. Keep it up. Keep them coming. I'm here for you. February 2021 monthly housing market trend. More than 200,000 new listings are missing from the U.S. market. We're seeing that. March 2021 housing report. National inventory declined by 52%. The inventory of newly listed properties declined by 20%. Prices went up, $370,000 went up 15.6% compared to the same time last year. Larger metro areas saw 12.15. Sorry, it's not 101,215%. Nationally, the typical home spent less than 54 days on the market, which is less 6 days less than what it was last year. Pretty interesting. Things we need to be taking into consideration now. Yes, saw a few of the driving for dollars. Fantastic. I think, Jonathan, put your time to that driving for dollars. Put a plan together. If you can put in like 15 hours a week, 20 is ideal, 15 hours a week, half of that is driving, half of that it's calling. I also recommend there's a little dialer called Mojo Cells that can make it happen a lot faster. So if you're doing for the driving for dollars, I recommend calling. So you do the driving for dollars, you add them, then you download that list, you skip trace, download the list, put it in Mojo Cells, and call and keep adding that. That's the ticket. I think you'll find a property in 6 months. Statistically, it should be 3 months, but I say 6 months just to double the amount of time it should take because of depending on skill sets and everything else. And I've seen people get deals even faster than that. And I've even seen that postcard campaigns can work really well, but I think calling is the most cost effective right now. Let's see here. I'm targeting out-of-state owners, so I haven't seen the property except for online pics. The owner's words of what was going on. Are those all off-market out-of-state owners? If so, yeah, keep that up. One of the things with out-of-state owners is you've got to hit them regularly. And I'd be interested, are you calling them or are you sending postcards? Be interested in what you're finding there. Jonathan, yes, skip trace using dial-ec, no response yet. Oh, dialer, no response yet. Are you actually calling them or are you doing a voice broadcast? Voice broadcasts can be good, but I like to call. I think you just get more personal results that way. And keep in mind, it's all timing. You've got to get the person at the right time. But yeah, keep it coming. 2.72 million homes remain in forbearance as of right now. We talked about that. Housing market stays tidy as homeowners stay put. Basically, homeowners are staying in their houses longer than they ever have before. We're basically at 12.8 years. In the past, we've been about 8.7 years. So people are staying longer, which also is just making it harder for inventory because there's simply less of it. Let's jump into our property finding tip of the week, right? Property finding tip of the week. Here we go. Yeah, Jonathan, if you're doing voice broadcast and haven't heard from anybody, something's going wrong with the voice broadcast. But if you are doing voice broadcast, you have to have serious numbers, like a lot that you're doing. I recommend 1,000 plus when you're doing the voice broadcast. And I also recommend that it goes to a voicemail, not to your cell phone, or you're going to get inundated with people that are upset. So that's another strategy I really recommend. All right, guys, property finding tip of the week. Today, we are going to be talking about auctions. Okay, so what is an auction? Typically, an auction is when a house is being sold in a bid situation, right? So bid situation is the house is being sold to the highest bidder if, and this is where it comes into consideration. Absolute auction is it will sell the highest bidder no matter what. Absolute, there's no minimums, there's no reserves, it's an absolute. I haven't ever seen an absolute, well, it's very, very rare to see an absolute auction. Most auctions are actually reserve auctions, and it will be sold if it meets the minimum reserve. That reserve is typically not disclosed to the bidder, so you don't know when you hit the reserve or don't hit the reserve until after the auction has actually taken place. There are two types of auctions in real estate. There's a public auction and there's a private auction. And I've purchased properties from both public and private auctions. Let's talk about these. A public auction is typically a foreclosure auction. This means the house is going to be auctioned by the trustee or the court to the highest bidder. There's a reserve, and that reserve is what the bank is willing to buy that property at or bid, credited against the money they've already loaned on the property. The bank can have a starting price and then bid up to others until the reserve is met, or they can keep bidding until they reach the amount that's owed on the property. The highest bidder will get the property as long as the bank approves that based upon the bid that they've had. The foreclosure auction, the laws vary by state when it comes to foreclosures, but typically if you're doing a foreclosure auction, you've got to have $5,000 to $10,000 cashier's check. You typically make that cashier's check out to yourself, and then you will endorse that check over to the attorney when that sale is being conducted. You endorse that check over to the winning bidder. Most cases, you're required to have cash, not a loan within 24 hours to pay the balance, which makes it really difficult to get a hard money loan, private money loan on these types of properties. The sales are typically at the courthouse, the county courthouse, and it's usually on an upside down garbage can. The first one I went to, almost 20 years ago, I was just shocked. I went down to the county recorders. I went into the rotunda. I was expecting to go into the court or something, into some nice room. No way. There was a bunch of people huddled up, flips a trash can over, puts his briefcase on there saying, this is the sale, we're doing it here, and set his papers down, and the auction started. That's how it happens. The second time it was scheduled outside on the sidewalk. So it was at the it wasn't at the courthouse. It was at the city building, but it was just out front on the steps. And, they held the auction and we were on our way. So that's some of the things to look at. It's not in some nice room or something like that. The second type of auction, and this one is overlooked, and there's not as many of these happening right now because of the foreclosure moratorium, but we're hopeful by the end of the year we're going to be seeing that lifted, is what's called private auctions. A private auction means that it's a private company or a private seller that is doing the auction. Don't get this private confused by you have to have an invitation to attend there. Anybody can go. They could turn you away if they wanted to, but they want you to show up. It's just a private company that's conducting this auction. And as a matter of fact, I have a whole live cast that goes over auction properties and specifically what these public auctions, private auctions actually look like. But for just a little bit of an overview, public auctions, Investor's Edge, if you want to look at pre-foreclosures and you want to look at the status and look at auctions, basically the concept here is how can we, let me just show you what I'm talking here. How can we get to these before, let's just look at Atlanta. Atlanta, Georgia. I didn't know. It looks like there's an Atlanta, Texas. That's crazy. Okay, so Atlanta, Georgia. Let's just come here and let's just look at here's your pre-foreclosures. There's just not a lot of pre-foreclosures right now. These are pre-foreclosures. They're single-family houses, not listed, and they have $50,000 or $75,000 of equity or more. There's 66 of those right now. Now, keep in mind, things can get foreclosed on, just not FHA. I think Fannie and Freddie backed loans are the ones that can't get foreclosed on. But there's 66 properties right here that you can be going after. One of the things you come in here, you can do your filters, pre-foreclosures. You can do notice of default, notice of sell, You can put dates on there, and then you can see. And then with these, you can come in here, you can get your information, or you can just simply create a list, add it to your list, and then once you've added it to your list, then you can skip trace. You upload the list, it'll skip trace for you, and then you can send postcards, voice broadcast, or you can just download that list and start making phone calls. So, which is my personal favorite, but it's sometimes if you don't have as much time, it's nice to do the postcards as well. So that's kind of what we're talking about here with those public auctions. So the Biden administration, they've extended that foreclosure moratorium, and so June 30th, I think, is where it's at. It'll be interesting to see if that continues to get. It'll be interesting. It was March 31st, but it got extended. We'll see if that keeps getting extended. I hope at some point they're going to let it go. The market needs it. This is the constraints that you're seeing. The market actually needs those properties, but artificial constraints are stopping them from coming. Okay, Jonathan's got an answering service, but we'll make updates to our process. Yeah, and we're here for you, Jonathan. We want to help you. LinkedIn. Okay, fantastic. All right, as long as that does not get extended, you will start seeing more properties that are becoming auction properties, both on the private and the public side of auctions. And we want to get them prior to the auction, right? Remember, the public auction, you can't get inside the house. You can't get title insurance. You can end up buying a second or third lien if you haven't done your research correctly. The earnest money is non-refundable. The money put down is non-refundable. You have to have cash the next day in many states. So let's get them before they actually go into the auction. So marketing to this list, call. You'll need a skip trace. You can do voice broadcasts. You can do postcards. You can do SMSs. You can do email. You can also, one thing I didn't put on here, you can knock on the doors. I've got a good friend of mine that knocks on doors on pre-foreclosures, and that is like his secret sauce that works really well. Again, right now with the artificial constraint of not being able to do the foreclosures, this has dried up considerably. But I think it's going to, once they unleash the beast, once they take that moratorium off, you're going to see lots of opportunity coming. So now's the time to prepare and understand that. And you can start like Atlanta, yeah, there's 66 and everybody's going to be going after them. But it's a good start to get your feet wet and know what to do and what to say. Now, what to say. Here's a couple things. If you're making those calls, you're saying, I'm looking for the owner of 123 Main Street. Are you interested in selling? It's that simple. Or one of my other favorites is, I understand you're having problem with Wells Fargo Bank or Chase Bank or whatever bank. I help people in these situations. That's a great way to talk. How can I help you out? So those are some really big things I highly recommend. Okay, guys, it is time for that main event, that thing we've been waiting for, investing for cash flow versus flipping for profit. I need another drink here. Okay, put your comments in, put your questions in, and we'll get those covered. I appreciate all of the comments and questions that are being asked, and we would love to see those continuing. Investing for cash flow versus flipping for profit. That's our topic. And what you're going to learn today is active versus passive income. We're going to talk about cash flowing assets. We're going to talk about the difference and benefits of holding real estate. So I had a conversation with a borrower of mine a few weeks ago. And he said he wanted to get in the same position that I'm currently am in the future. He's just like, hey, I want to be like you 20 years from now. And I said, well, what do you mean? And he said, I would like to have more money coming in passively without having to go out there and grind, without there having to find properties, without there having to fight with all the investors. He wanted to know how I did what I did, right? So, and my secret sauce is actually pretty simple. And when I told him, he's like, you're kidding. I said, no, that's the secret sauce, man. I'm not that bright. I just execute. If you keep one property a year, every year, in 20 years, you look like a hero. That's really been my secret sauce, guys. And so it's very easy to trade one job for another, right? So I see people do this all the time. They get into fix and flips. They eventually quit their day job once they have some success. They start making some money. They go full-time in real estate. In the end, they traded one job for another job. Now, that's not necessarily bad. because they may have traded a lower paying job for a much higher paying job, but they're still trading a job for a job. It's typically much higher paying. This is a good thing, not a bad thing, but it's still a day job. You've got to show up and nobody else is doing that for you. So at some point, as that fix and flipper, you've got to transition over into what we're going to call passive income. Because passive income comes in every month without lots of effort, very little effort to no effort on your part. Your money's working for you. Your investment's working for you. Active income is money you exchange time for dollars, meaning you put in the time and somebody gives you some dollars. It's a time for dollars trade. For me, financial freedom is how many days you can go without having to actively work again. So can you go a day, a month, a week, 10 years, 20 years, 50 years, 100 years, indefinitely? How long can you go without having to work, which means you either have to have a lot of money in the bank or you have to have something that's paying you money monthly in this passive type thing we're talking about. So for me, financial freedom is measured in time. How long you can go without having to work is financial freedom in my eyes. Time, the true measure of financial freedom. This can be accomplished by lowering expenses. This can be accomplished by saving money. And this can be accomplished by investing in cash flowing assets. We're going to talk about all of these and deep dive into them. So lowering expenses. Every one of us, myself included, we can all lower our expenses. There are many things that we can cut out of our budgets. The question is, what's the right balance based upon the income and your expenses and your assets and your cash flows? And I found as my income goes up, my spending has gone up as well. However, it's been disproportionate, meaning I'm investing a higher portion of my increased income than I am spending, okay? And so I'm in that situation where my passive income outweighs my monthly expenses because of the investments that I have made, which is exactly where we want to have you and help get you on a track. But it takes 20 years to get there sometimes. Putting money into savings, that's this next thing here. I think everybody should have some of this savings. I think you should start with at least $1,000 of savings for those incidentals, emergency things. I think you need to grow to a month worth of savings and eventually grow to 3 months worth of savings, meaning you have 3 months you could have on savings that you could live off if you needed to. This can give you a little bit of a nest egg. It can make you more comfortable to making more investments. And so if you're going to do that, I recommend a high yield savings account. Right now, they're 25 times more than traditional banks, although banks aren't paying a lot of money. High yield savings aren't paying that much either, but it's still so much better. One of the ones I use is Synchrony Bank. Right now they're paying 0.40. They've been paying as high as 2.5% in the past. You'll see that fluctuate, but if you make a relationship, Synchrony Bank you can do completely online, and then you put some money there and you just let it grow. And the other one is Citizens, and they're at the same as Synchrony. Both of these I think are ones that you should check out. Okay. I think we need to talk a word here on inflation. The problem is inflation, right? This means the cost of the same thing is going to be up year over year. So if a gallon of milk today is $1, in 10 years it's going to be $1.50 or $1.20. It basically for the same thing, you're paying more for the same thing. In 2021, inflation was 2.24%. So if it was $1 to buy a gallon of milk, then it was $1.02 24, almost $1.03. That's basically what inflation is. 2020 inflation was 0.62%. So less than a penny on that dollar is basically what we're looking at in inflation. But when that happens year over year, and your money is not growing proportionate to the inflation, you're actually losing money. So a savings account that makes you 0.5% means money is less valuable due to the increased cost of goods. So for my emergency fund, I put in a high yield savings and I don't worry about inflation because that's my emergency money. That's like, I'm going to be happy to have that money, but I make it all up with cash flow. And that's where we get into this whole concept of these cash flowing assets. One of the best cash flowing assets is single family houses. And I say single family rather than apartments or anything like that. Apartments have a better yield. Plexes, fourplexes, threeplexes, duplexes, they have a better yield, but they have higher management. So if you're just getting started, you may want to be looking at plexes, duplex, threeplex, fourplex. You're going to make more money for the amount you put into it. You'll get a better yield. However, you're also going to have more management. It's going to be more management intense. You're going to have more problems, and tenants are going to stay a shorter period of time. So there's a trade-off there. I started out with plexes, and I graduated and went into rental properties, single-family houses. And I kind of rate single-family houses like they do commercial property. Lots of people aren't aware of this, but commercial property, they grade in A, B, C, D type properties. Like, oh, this is a Class A property. This is an A minus or a B plus or a C. It's kind of just they decide for themselves if it's an A or a B or a C type property based upon the finishes and where it's located and those things. But I do the same thing with my rental properties. So when I first started, I was buying stuff in bad neighborhoods, but I was buying for cash flow, and it was heavy management. I was dealing with plexes. And then I started buying single family houses in a little bit better neighborhoods, but still not great neighborhoods. And then I moved up. And so now most of my properties are A minuses or Bs, solid Bs, B pluses because of the neighborhood and everything else like that, which gives me better cash flows. Not as good as cash flows when I was slumlording and dealing with those types of things, but I have decent cash flows, and I'm in better neighborhoods, and I have tenants that stay a long time, which basically means I don't have to deal with as many headaches. So my income for time is a lot higher when I'm dealing with those B-class single-family house rental properties. You can increase this cash flow by putting a large down payment or by paying the loan off, which can be a great strategy as you're doing some other investing and you have additional cash paying the loan off. Cash flow. Cash flow, it pays you every month no matter if you work or you do not work. This is the key to building long-term wealth. Now, benefits of real estate holds ways you can make money. You make money on the cash flow. You make money with the business write-offs. You make money with the appreciation. You make money by writing off those maintenance repairs. You make money with deductions. You make money by depreciation. You make money by accelerated depreciation. Standard straight line depreciation, amortization, which is the principal payment buy down. Those are all ways that we make money. And if we decide to, we can do a 1031 exchange. We talked about this in previous times. The Biden administration is talking about doing away or changing, I shouldn't say doing away, but changing some of the 1031 exchange. So we want to keep your eyes open, ears open on what is happening with that. So how do you do this? You reinvest any money you make on real estate deals. So if you go out there and you do a real estate deal, you make $30,000 or $35,000. That's kind of our average customer, our average member makes. You want to take that same $35,000 and you want to reinvest that right away. If you need the money, start with wholesaling, fix and flipping. But the goal is that you can just reinvest that money. If you don't need that money, you could reinvest into a BRRRR type of a strategy. And keep in mind, you won't have to pay taxes on the increased value until you sell, which is why BRRRRs are nice. So rather than doing a fix and flip and making $35,000 and paying a hefty tax bill, you could have done a BRRRR deal, not realized any of that money and not paid any taxes on it, but you've got this asset and then you can rent it. You can rent it out and you can make some money along the way. And then down the road, you can sell the property and hopefully realize that income. This can start to build cash flow, keeping properties every year that you rent out on a long-term hold. Now, let's put a little perspective in this. Just this year, after 20 years of buying rental real estate, my wife said, I am so glad we did this. Well, I can tell you this, in year one, that definitely wasn't the case. Year two, year three, every year it's gotten a little bit better, but 20 years and having some perspective and looking back, it's like, holy cow. That was amazing, and it's only getting better, and I am so glad we went through whatever pain and hardships we had to go through, because looking back, it is worth it. My property values have gone up more than 300%. My rents have gone up more than 40%. Our tenants have paid down our loan balances. We have great cash flows. I mean, it's hard to see the perspective, but when you can look back over a decade, you can really, really see this. So let's talk about the other side of this equation, which is flipping houses for profit. There's some pros to this, right? You make a large amount of money quickly. I don't know of anything else you can do to make that kind of money quickly, flipping, either wholesaling or fix and flipping. It's a short-term investment, so you're in and out. So if market fluctuations or changes are concerning, it's a great place to be. It is higher taxes. That's one of the cons. You don't know what's happening with some of the market conditions and unexpected rehab costs. Things can become more expensive than what you were thinking they were going to be. Investing in real estate, rental real estate, some of the pros: cash flow, the tax benefits, the appreciation, less risk of a downturn in a market. You take on a little less risk. It's long-term thinking. Some of the cons are you've got to manage the rental property, and you've got to deal with potential vacancies or making those payments if nobody happens to be in the property. Okay, so investing for cash versus flipping properties for profit. What should you be doing? The real answer for most people is you really should be doing both. You shouldn't just be doing one, and you shouldn't be doing the other. You're doing both as you start to grow, and that provides you with money now and income now, and it also provides you with cash flow. And if you build on that cash flow and you look back 20 years, you're going to say, I am so glad we did this. All right, guys, our complete system that takes brand new investors through flipping their first home is called our Find Fund Flip system. We have dozens of hours of trainings, deal finding software, access to our 100% financing loans. Check us out over at DoHardMoney.com/get started. You want to check that out. We got a couple of comments that I want to make sure. Rashay saying prices are coming down, but going fast. That's interesting. Off-market and wholesale. Fantastic. Off-market and wholesale properties. Yeah, it's interesting to see those prices coming down. It needs to happen. It'll happen as time goes on here. Earlier, I talked about getting a letter, a postcard, a handwritten font template. If you want to get a copy of that, link, this is our link, DoHardMoney.com/postcard-download. I'm going to have Kate put that on there. Or you can text 435-294-0433. Just text us your email address, and it will automatically send you a copy of this postcard. You can get a copy of it. It's a great way, and you can change your name and phone number and all that type of fun stuff. If you are enjoying these, please hit that thumbs up button, hit the subscribe. Do I have any new subscribers today? If so, put it in the comments and let me know that you're a new subscriber to Do Hard Money. I also like to know some future topics. What would you like to hear as topics in the future? I've got several of them on the screen now. Be very interested as to what you would like to hear. Please type it in the comments and let me know what you would like to hear as future topics for these live casts. And don't forget to get a free copy of that postcard template, 435-294-0433. Michael subscribed. Thank you, Michael. Really appreciate you being one of our newest subscribers to our Do Hard Money channel. Thanks for being with us. I know you will love it. All right, guys, if you enjoyed what you heard today, check out my Income Hacker podcast. On the podcast, you can listen up on all these great things. It is on iTunes, it's on Stitcher, Spotify, Alexa, you name it. Say, Alexa, play Income Hacker podcast, and you are going to be hearing the podcast rolling, which is super awesome. A couple of questions are running in. Making offers without seeing properties. All right, that's something you'd like to have for a future live cast. I appreciate that. How can I lend money? Ran, yeah, fantastic. Ran, if you have money you're looking to lend, over like $250,000, give us a call and we can help you out with a few ideas with that. You're going to want to talk to Dawn. If you call us, you're going to want to talk to Dawn or Matt. Let's see here. Michael, I'm in California, so I need everything virtual and how to set up workflows for handling the business remotely. Okay, I like this, Michael. Virtual workflows, virtual stuff, that's a great topic for a future live cast. Thanks for the tips today, says Jonathan. You bet, absolutely. Okay, our winner. We are giving away our t-shirt winner of the week. So our winner of the week is getting our I Made It Through Rehab t-shirt. By the way, our winner, I want a picture, man. I want a picture, or guy or gal, whoever's getting that. And we've got our mask as well. Our winner for last week's live cast And we'll be announcing this week's winner next week because it goes through the week. We like to see comments and that type of stuff. Our winner is Riley Ingley. Riley, if you were with us today, please put it in the comments. If not, we appreciate you being with us, and we would like to have you on future podcasts. But Riley, what I need to have you do is email support@DoHardMoney.com. Put in there you are the shirt winner in the subject line. Put your screen name, which would just be your name in this case, your mailing address, your cell phone number, your shirt size, and we will pay for and send you out the free t-shirt, pay for shipping, and everything else like that. So everybody hit Riley up, give him a congratulations, let him know how great he did on being our winner of the week. And Riley sent us over an email and take a picture, put it on social media, let us know that you're wearing your I Made It Through Rehab shirt of the week. And everybody here to be the winner next week, join us next week, and you can see if you're the t-shirt winner of the week. Let's see. We've got a lot of stuff. Jonathan Murphy, nice tip on Alexa listing on Income Hacker Podcast. Yeah, it also works on Google, the Google Home. It works really well. So, yeah, you bet. Gaynell, the podcast is awesome. Listening every morning and afternoon during my commute to my W-2. That's how you do it every day. I appreciate it. I'm listening to podcasts. I'm listening to stuff. I'm growing my mind. So I love it. Thank you, Gaynell. Congratulations to Riley. Absolutely. Okay, here, all those that participated, find out next week if you're going to be the winner of the week. Next Tuesday, I'm going to be covering what is the day in the life like as a real estate investor. And specifically, Gaynell, I'm going to be talking about those that have W-2 jobs. So what is the life of a real estate investor like while you're currently employed, and how you can make the most out of all of that. We'll be covering that next week, same time, same place, here at 6 p.m. Eastern Standard Time. I want to have you with us. Now, if you haven't already gotten that postcard template, text me your email address, 435-294-0433. 435-294-0433. Text your email address, and I'll get you over a copy to that. If you haven't already subscribed, please do so now and let me know you are the newest subscriber. I really appreciate it. Jonathan is excited about next week's topic. So am I. Can't wait for you to be with me. Thank you so very much for being with me today. Thanks for the questions, the comments. Keep them rolling. Keep them coming. And until next time, make it a very profitable day. And bye for now.